and we're going to take a look at the live trading room today on the 15th of October. We're about halfway this month again. Time flies. But you know the drill. Before we actually look at the charts and at the Forex market, we're going to quickly look at this risk disclaimer, explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So we thank you for your attention on that one. And I again welcome you to this live trading room. And it's hosted by Admiral Markets. My name is Chris, by the way, and we're going to have a session tomorrow and Thursday as well, and same time, same place. And Thursday, 5 p.m., we also have an educational webinar. So I'm going to show you how you can register for that in just a second. Today's focus, well, we're going to be establishing a trend bias. We want to know what is the trend, and either if we're trading against it or with it, we still need to know that. What is the opportunity? Then check for any filters, look what the trigger could be, and then decide how to enter the actual trade. All right, so you'll watch me look at the charts and prepare that and trade them. And some strategies at the bottom, for example, breakouts and Fibonacci trades. All right, make sure to take a look at Admiral Markets in the social media. And with that said, we're going to take a look at the calendar and then the charts. But first, I just welcome Michal and say good morning to him.
Good morning, everybody. Good morning, Chris. Thank you very much for such a lovely introduction. I will now change the presentation to my screen. There we go. I hope every one of you can see me. Once again, my name is Michael Onohoff, and I'm a Client Relationship Manager for Admiral Markets. If you wish to reach me, you can do so via email, Skype. Here's also my LinkedIn and also the email address of Trading Camp. Before we get down to serious business and Chris shows you everything that he has to show you about the account, I want to take a small detour and tell you a short story. Do any of you know who JP Master and Bill Kaplan are? In case you don't, those two people created a company called Strategic Investments. And despite its name, this company did not deal with investments per se. What they did, they recruited MIT majors and they taught them to play blackjack. Some of you have probably seen a movie called 21. It's not historically accurate, but the idea is correct. MIT students are taught a mathematical strategy and are able to win big in a casino. All of that also involves romance, betrayal, and a bulky security guard who takes you to the back room, which you will only leave with no money and a crushed cheekbones. So the strategy mentioned in the movie is very simplistic. It really is just, in reality, it's a lot more complex. The recruitment process involved choosing one great student out of hundreds. The chosen ones were great at making decisions under pressure and were bloody good in counting and analyzing. But the idea remains correct. Using advanced math skills, MIT students were able to make profits playing blackjack over long periods of time. Blackjack is a casino game, and therefore the house has an edge. In 8-deck blackjack, the house has 0.85% edge. Best MIT minds, advanced mathematical strategies, hours and hours of training, ability to act calm under stress, all of that allowed the MIT blackjack team to receive an extra 2% edge in their favor. So let's recoup. Countless hours of training, dedication, and the use of mathematical skills, all of that went to generate a 2% edge. And the 2% edge was enough to secure high and stable profits over years and years. Now, if there is one similarity between Forex and blackjack, it is this. Both Forex and blackjack are zero-sum games. For someone to win, someone has to lose. Needless to say, people with an edge won. The ones who do not have an edge lost. So right now, all of you are here listening to this webinar. Those webinars are long and the presenters talk about complex concepts, but still, you decided to spend your time here, and you did so to learn something new and develop yourself. Right now, you must think of yourself as those MIT students. You're working on your skills, and if you carry on long enough, you will be a lot better in analyzing and making tough decisions on the spot. Right now, you're working on your edge. Every hour you spend learning, listening to webinars, reading books, and trading on your demo account, all of that adds to your edge. How big your edge will be entirely up to you. Just remember, if hard work and dedication allow to make profit on a casino game, just try to imagine what can be achieved on the Forex market. And if you need a little bit of help acquiring your edge, you can always write us at camp@admiralmarkets.com, and we'll happily admit you into a 3-week course with everyday assignments, strategies by professional traders, performance tracking, personal coaching, and literature supply. All you have to do is write to camp@admiralmarkets.com with a short essay about your Forex aim, and also open a real account with $10. It's been Mikhail Onachov. Thank you very much for listening. I will now pass the microphone back to Chris. Thank you.
All right. Thank you so much, Michal. Always great to hear from Michal. And I'm sure the trading camp is in full swing in the meantime, so that's great. And maybe you yourself are participating. I hope so. We're going to take a look at the Forex calendar right now, see what kind of news events might be disturbing our technical analysis trade ideas. And wow, there's a lot of pound news. That's kind of a long string there, 1 hour 38 minutes from now, ranging from all kind of core PPI to output to input to CPI, RPI as well. Alrighty, a lot of stuff going on in Great Britain. We got German ZW economic sentiment in the Eurozone, and otherwise some lighter USD news. All right, what I still wanted to mention was, if you're new to here, just go to admiralmarkets.com website, go to education, click on webinars, and you can sign up for any of these webinars. For example, tomorrow will be trend trading, and let's see, Thursday we'll have range and reversal trading, and on Thursday evening we have a educational webinar on trend definition. That's with me and Nenet. All right, so that's how you can find that. Very easy. AdmiralMarkets.com. Go to education webinars. You can sign up. There's also a video archive, and you have a whole list of educational topics that will provide you a very good base of learning. Alrighty, let's move on to the charts. I'll open this. Let's start maybe with the euro and pound. I think it's intraday trading, so I think it makes sense to focus a bit on these two. All right. Alrighty. So we had some downside on the euro last week, but the entire weekly candle was more or less just a doji, about 100 pips. So the entire week was hardly any movement, if you look at the weekly candle at least. Now we know that within the week we did have some downside here, down to these support levels around 134.50, 135, where we did get a bounce. And we challenged 136.07, but didn't break it yesterday. So yesterday was a small movement. The U.S. had some kind of public holiday. I've heard that not many people take off, but it was mentioned. So anyhow, we did get a bit of a spike. It was 1 hour and then down again. So we had a very small break here. And well, we're a bit of a tight spot, I would say, on the euro. I would, if anything, rather trade it to the downside if we do break, because the upside, there's a lot of resistance. We have 136.07, 136 here. If we break those numbers, maybe we have some space up to 136.45 in here to the upside to challenge this resistance, because remember, the currencies are always challenging and testing one support or another, or one support or resistance or another on one time frame or another. So that's always the tricky thing at the beginning when you're just starting out. You know, you don't see all those support or resistances, but it's always bouncing from one support or resistance to another, and it would be challenging that resistance, that top. Right? So there would be maybe a bit of a space if we move up to there. If we break below 135.50, we can see a fall to challenge maybe this bottom, for example, right? And maybe a pause and then continuation, who knows? We'll see later on. But there could be some space as well. Right in here, I would say let's wait personally, but we can zoom in a bit and take a look at the 1 hour candles. We do have a bottom here in place already, and the top is at 136, I think. Let me check. 135.97. So we could see maybe some continuation up to challenge this top, for example. We do have higher highs. If you look at the candles themselves, we have high highs and higher lows on the hourly, right? Except this hour we broke last hour's low. So we can wait maybe 5 minutes, see how this hourly candle finishes. For those of you who are new, I have 4 things on my chart. The arrows, Chris, are Chris 2, that's funny, with TOO, by the way, not the W in between, but the arrows are fractal. They're fractal indicators. They just are an easy tool for me to see tops and bottoms. That's all. Nothing fancy about it, in fact. And I have 2 moving averages, 34 and 144 EMA on this chart at the moment, and 1 oscillator, the awesome oscillator. Alrighty. So let's see maybe in an hour or 5 minutes, 4 minutes now, how this hourly candle closes. But preferably, you know how I am, I do like more confirmation than trading it if it's kind of halfway. Yeah, two EMAs, in fact, EMA close. Alrighty. The pound. The pound seems, I mean, I know that not everyone is an Elliott wave fan, but I don't think you have to be an expert to see 5 waves. And if you can see that, you might as well register it, right? No problem to do that. It's not that complicated. So what we could have is a 3-wave correction of those 5 waves. Might happen. But I'm not trading it necessarily purely like that. As a confirmation, you always want to seek a confirmation, right? You always want a trigger, right? Where at the beginning of the PowerPoint we said, establish a trend, look for the opportunity, look for any filters that could block the trade from developing, to establish the trigger, and then establish the entry method, right? Basically, we all do that. Sometimes we make shortcuts. For example, when we're looking at the euro, I went a bit faster because if we would take it thoroughly, what is the trend? It's still up, isn't it? Right? We got higher highs and higher lows on the 4-hour chart and the daily chart, so it's an uptrend. Right? So what would be the opportunity? Maybe a breakout here above that. That could be the opportunity, right? Any filters? Anything disastrous that could block this trade from developing? Well, we do have daily divergence, right, between these tops. So yes, there is some bit of a filter. So we should probably be careful with upside. If you look at the daily candle, what was daily candle here? It was a big wick, wasn't it? On the top. So if you put a line at the daily high and the yesterday's low, you preferably want to trade it if one of those 2, in fact, is broken, right? But the upside we know has divergence as well on the daily chart. So that could be a filter, right? Depending on how you trade it. What is step 4? Step 4 is the trigger. At what price level, do we get interested? Well, that could be, for example, the yesterday's high or yesterday's low breaking. That could be the trigger, but it doesn't necessarily mean we enter immediately upon the break of yesterday's high or yesterday's low. We could wait, for example, for the break of that level, then zoom into a 5 or 50-minute chart and take the pullback or immediate breakout or continuation. All right? Once we have a trigger, it doesn't necessarily mean we have to trade it immediately. Then we could still decide regarding our entry methodology and how we exactly take it. Do we take it on a retracement of the hourly candle, for example? There are various methods on a fib. There are various methods to trade it itself, right? So now, not always, subconsciously we might skip some steps because we already know the answer, but this is how you can look at the euro. And if you do the same with the pound, then we have a downtrend on the 4-hour. We might even have a downtrend on the day chart, right? We have major resistance here, and we did make clear five waves. So there is a potential maybe to correct to the upside, though. That would be more or less a counter trend trade, right, as we already established. And the trigger of that would be a break of this orange line, which is capturing those tops very neatly. So that could be a breakout, counter trend breakout, though, to the upside. So how about a with the trend trade? What would be a trigger for that? Well, we could clearly see bottoms here. We could connect the first three bottoms, which would give a trend line like this, right? Let me change it in, well, we can keep it lime green, that's okay. We might even be able to draw some different line like this. If we zoom in, we are cutting through a candle, or two candles. This is partly a candle. We're cutting through a wick here. So typically what I consider okay is if you cut through a wick like that, it is okay-ish, right? I mean, the best would be to connect the tops and bottoms neatly, but in some cases it does make sense to do something like that. So we could see some fall if it does break. Now, is there a lot of space? Not really, right? Because if we fall here, we could bounce off this trend line and then bounce off the bottom. So that's something we want to be aware of. Doesn't necessarily mean that we don't want to trade it, but it does mean that we have to zoom in probably to a lower time frame at least, because otherwise we don't have the reward to risk if you use this 1 hour chart. Where is the 1 hour top? Right in here. So there's no balance in taking that, right? If we break this bottom. Why is that so? Because this is the risk. And what is our potential reward? Well, something like that, right? Because we could already expect bounces there. Those two don't match up. So we have to be just aware of that reward to risk balance. And if you zoom into lower time frames, then the chances of that having that balance are higher. It's very simple. It's always measuring the risk versus the reward, and all you have to do is really look at support and resistance and compare those. If it doesn't match up, then the only way to potentially trade it is if you zoom in. If you don't like to zoom in to a lower time frame because you're used to that time frame, then look at another currency. Alrighty. Let's see, anything else? Well, we are at a talking spot. If you look at this 4 hour chart, you can see we're at the long-term moving average. So either this is sometimes the currency does correct back to that long-term moving average and it finds kind of a bigger bouncing spot. Or, of course, there's always an opposite. There is actually the bigger reversal happening. So the 4 hour won't give us guidance on that. We don't know that. I mean, we just know that's a talking spot. We would need to take a look at the day chart to get a clue. Let's see. Well, this is just one move up so far. We do know that we're a very high spot here, very close to weekly resistance. All right, if we look at the weekly chart, we know that the pound was challenging this top. And we know that breaking that top is tremendously difficult because the currency, basically what it does is it challenged this bottom, couldn't. It went all the way up to challenge this top. So for the pound dollar to break this top all the way from here in one go, well, you know the answer. It's very unlikely, but it still could have pushed up to maybe exactly that level at 163. It didn't. It missed it by 50 pips, which is very normal in a way, right? We had a huge weekly reversal candle and a continuation. We squared up that candle a bit, retraced that candle, and got a downside continuation, making lower lows and lower highs on that weekly chart. So where's last week's high? It's at 161.05. That could definitely still be a resistance spot. And last week's low, which is always still a support zone, is 159.15, which is why we have that green line there, which is basically a daily bottom. So any up move, we should be aware that if we do trade it to the upside, we would have to take our profit before 161, which is the next resistance. So any potential upside is counter trend, and we have to be careful of that resistance there. If we do trade it downside, we just have to be careful of 159.15, and we'll have to trade it on the lower time frame. Regarding the, I got diverted here. I was talking about this, in fact, and if this is a reversal spot for more upside, for more downside, or potential bouncing spot for more upside. And if you look at the day chart and weekly, you would think that this is a pretty high resistance zone anyhow. So some downside here, to be honest, maybe back to this level at least, is seems likely if I would look at these charts. Doesn't necessarily mean, though, that because we are at a high spot that we will move down immediately. We do always have the potential to first retrace and then fall. But looking at that, it does seem likely that we can move, for example, to the daily long-term moving average, which is at 156.30, right here zone. In that case, basically what the pound to dollar is doing is correcting this up move here, which was a one straight go with higher highs and higher lows. We would be basically correcting that swing high, swing low, and challenging this bottom on this daily chart. All right. Let's see. Well, that's basically what it all boils down to, I think. I could put a green line here. That is the long-term target at the moment for longer-term downside, I would say. And if you basically you could add fibs, you can do anything. You can add anything you want. If you add fib here, for example, potentially, or it depends. You could even fib this downside here first. Well, I guess we should. It depends. You can do both fibs. In fact, sometimes I have both fibs on. Let's take a look at the targets here. I'll put it back to the 4-hour chart. So what are the targets? Well, we have -618 around 157, and maybe we can put a fib on the upside as well. Let me move this fib higher and get rid of this fib. Alrighty. What do we have here? Do we have some confluence between those fibs? Let's see. Not much, in fact. I've seen better confluences. What I'm looking for is if the targets are matching the retracement fibs. But there's some discrepancy there. Let's see. Now, if that's the case, maybe a different fib sometimes helps. Oh, let me put this on the daily chart as well. I forgot what the blue line. The blue line was. The blue line was the long-term moving average. That is kind of our main target at the moment. Let's see. Well, I guess yeah. I would say that this is still the main fib. Of course, we could put a fib on the entire up move, and then the -618 and the 382 are more or less aligned. Maybe that makes the most sense. Back to the 4-hour chart. Let's see, there's a 50 and 272 confluence a bit there, around 158.20, 40. And then probably the 157 will be the target for the moment. But we know that the pound likes the 886 fib as well, which would be equal to the 50 fib of the entire move. And sometimes, you do see punches through the long-term moving average. Take a look at this 4-hour chart, right? The long-term moving average is the target if you have, for example, divergence, but we got a bit of a punch through here, right? So that could happen too if the currency is going to the 886 and 50 fib confluence there. It could punch through the daily, which is the blue line moving average. Anyhow, that's once we break this bottom, basically 159.15. Then you know what the targets are for downside. That's why I'm showing it to you. Anything else? Euro is finding some rejection, in fact. No, that's about it, I guess. Let me just, let me just show you one thing. Let's see. This is the Camarilla. Let's take a look. The Camarilla indicator, for those of you who are wondering, is a pivot point indicator. And it's pretty handy because you have, for example, an indication where you could expect a range trade, which are L3s and H3s, or breakout trades, which are H4s and L4s. And the target are H5s and L5s. And for those of you who want this indicator, by the way, or who want this indicator, which is a very cool, in my opinion, a cool trend definition. It's good for trend definitions, trend and support and resistance. You can get this indicator as well with the coloring candles if you register on any Wednesday or Thursday in October. So there's still time left, 2 weeks. And just send an email to my email address. I'll write that down. All right, I hope you see that. I just posted my email, just in case you were interested in that. So let's take a look at the pound dollar. What is the pound saying on the 50-minute chart here? Let's see. H4 above 160. Which would make sense. That makes sense. How about the downside is saying 159.35? Doesn't make too much sense because there's still this support level in my opinion. Maybe if we get a bounce off that trend line and then break, then it would make sense. Otherwise, I don't know, kind of in the middle of nowhere in my opinion. The L3 could be interesting maybe, maybe it could bounce off this. It always bounces a bit off support or resistances, so that might make sense. The euro dollar, let's take a look. H4 at 135.80, that seems risky to me, but targeting double top at 136.07. I was more thinking about above 136.07, but maybe that's aiming too high. And the L4 definitely makes sense. So I like the upside on the pound and the downside on the euro regarding the Camarilla at least. Kalen is saying regarding the euro, he has an idea 135.27. That's just 1 pip above the L4 short breakout, okay. And this support level. To me, that would be risky. That would seem risky to me. I mean, yeah, there's always that chance that you get a correction like this and then see a bounce like that. But what I see is a breakout of this trend line. So there could be a decent chance even to go to this bottom. Doesn't necessarily. It could bounce a bit here, but your target is all the way up in here, and it just could bounce a bit and then continue maybe down here and then move up there. I don't know. To me, it nah, I don't know. Not too excited about it, as you can see. Let me take a look at the other chart. $136. Ken is saying 135.27. Let's see. Yeah, it's once we break these 4-hour fractals, I would say that this one is kind of in the middle now. So that's why I don't think it's that important. This is the more important bottom. So I think we can see a retest of this bottom, not so much the middle level there in there. Once we break I mean, that level was important yesterday, but now we have a new 4-hour bottom in place. So, sorry, I'm losing my voice. So that's why I don't think it's that important. If we would basically break below this trend line and these support levels here, I think we can make a fall, at least to challenge this bottom, basically. Alrighty. So back to our normal charts. I had an idea on the yen as well, euro pound, pound out and odd dollar we can take a look at, I was thinking. Alrighty, euro pound. Well, I have still that entry order there. We have on the 1-hour chart. Let me show you. We have basically completed a 5-way. For those of you who like it, it's not easy. It's not difficult to see. You can see 5 waves here. And in any case, we had a very strong up move here, right? With a big oscillator reading, very powerful oscillator reading. So when you have a powerful oscillator reading like that, there's a decent chance, good chance, that the top or the bottom, the extreme, will be broken. We broke that extreme. And why is that so? Well, we create divergence. And once you have divergence, then there's a higher probability of correcting lower. So we finished. We have those divergences. We have double divergence, in fact, between these tops. Right in there, we can put a line connecting those tops. maybe a bit like that, and connecting the bottoms a bit like this. Looks like a trend channel in a way. So what I'm looking for is a break of this trend channel to the downside. We can see a retracement back to the 50 fib, and I still have an entry order there. All right. We could move the fib up to the entire swing high, swing low from top to bottom, and then the entry is just above the 618. So we got a lot of things saying that there's divergence between these tops. We've completed several waves. We've hit the target, because if you put back the fib to originally where it was, you can see that it went exactly to the minus 272 target. So there are some reasons to think it can go down, all right, and correct, which is a counter trend correction, right? What is the trend? It's at the moment upside, right? Because we're making higher highs, higher lows, and we broke this light green line, which means that downside is over. We have an uptrend. Trend is up. What is the opportunity? Well, the opportunity is, in fact, either a break to the upside here or a break of this to the downside. One of them is with the trend. One of them is counter trend. The with the trend break, though, has double divergence on the 1 hour chart. That's a filter. I wouldn't take that because of that personally. The break to the downside doesn't have any filters, but it is counter trend, right? What else do we have to look at? So we looked at trend, opportunity, filters. Trigger. What is the trigger? If we break, for example, a channel like this, do we want to trade it earlier than that? Well, maybe, potentially, but you have to realize that it's riskier because we're still in that uptrend channel. If we break that 1 hour uptrend channel, then we have more confirmation of a reversal back down to the 50, 618, 786, or 886 fib. Could be any of those where we get a bounce again to the upside. So that's the trigger, and the entry methodology could be an immediate entry order above this low here, or wait for it to break and wait for it to hook back and take entry here, for example, or wait for it to break, pull back, and wait for a confirmation here. So those would be entry methodologies. So I still have the entry order here, and if it does break here, it could be a reversal trade. Let's take a look at the 50-minute chart. It's quite choppy. Ugh. I don't know. Let's wait for that to happen. Let's move on to something else. Dollar yen. I think dollar yen is interesting. We've had a nice trend to the upside here. And let's see. There's a bit of a correction here and a good impulse continuation. Now, in this case, we have divergence, but it's 30-minute divergence slash 1 hour divergence, and it's only a single. I think single is still acceptable. Does mean, though, we can see maybe a bit of retrace back to the 98 level and then bounce again up to 99, maybe 99 and 50. Let's take a look at the 4-hour chart. You can see the 4-hour chart is still nicely oscillating to the upside. Basically, when we challenge, if the currency were to challenge these support factors, we should see a bounce there. So that's an important level. 98.10 shouldn't be broken. Back to the 30. But the question is if we even go that deep, because we could bounce anywhere in here, in fact. It's possible. We could keep doing this as well till we get lower and then bounce. Making kind of a small channel here. We can keep an eye on, the 50-minute fractal, the 9850 level. If it's only a 50-minute fractal, but it would indicate that we could see maybe a break to the upside. The value of the support line is 9810. That's the 4-hour support. If it goes that far, we should definitely see a reaction to that level, even if it's just 30 pips, right? It should be a bounce because it's a 4-hour fractal and it's an uptrend. It broke out to the upside, so there should be a bounce. If we break above 9845, then we could see maybe a breakout to the upside. So let's go through our steps. The trend is up. Are there any filters? What is 1-hour divergence? But otherwise, the trend just started, so that's good. Sorry, I skipped one step. That's the third step. The opportunity would be maybe a break above the 50-minute fractal here as a breakout trade. And then step 4 is what would be the trigger? Well, maybe move above the 50-minute fractal. What would be our target, by the way? Do you know the answer? I gave you a hint. It's on a 1-hour chart. Anyone know the answer? Any takers out there? Bonus points. I'm just kidding. For those who know the answer. Free indicators. Let's see. Kayla says 99.17. Janina says 99. But what is the reason for that? Well, I mean, what tool do you use? Is it a moving average? That's what I mean. That's more important than the number. Now, I know some of you don't look at the dollar yen, but for those of you who do or are interested in it, Kaden says 4-hour previous high and Ichimoku cloud border. Anyone else want to throw their opinion in? What would be the target? Janina says the fib, the minus 272. Well, I guess let's stop there, otherwise it will probably wait too long. But is there anyone else? Maybe everyone's sleeping. Does anyone agree with Kaylen's idea or Janina's idea? 4-hour previous high, or the Ichimoku cloud border, or the fib, the minus 272? All right, there's not much participation. You learn the most if you actively participate. Otherwise, it just goes through you and you're not really absorbing anything. If there's anything to observe, if you know everything already, then I'm even happier. That's great. And I'll be thrilled. Well, no one's responding, so must be a boring question otherwise. Okay, thanks, Tarek. Even if you know clue, just let me know. I mean, it really doesn't matter. You can just say, no idea, like Tarek did. Great stuff. Well, if you look at, first of all, the answers that Karen gave and Janina gave are good answers. And they have a lot of validity. First of all, this is a trend. So aiming for the 272 target always makes sense, right? In most cases, it does make sense. Now, the only thing with the minus 272 target, though, is that what you want to do target, you realize it and should have a support. If we take three, still that was supposed idea and target if it's in the middle of the field, then you are exposed to a deeper retracement before it can move up to that target. So that's the only thing you have to realize. So the target is definitely good, but I just have to put a, give an extra emphasis on the fact that it does depend on the parameters of the entire trade, because something like that could happen, as I just showed you. But if you're trading this 1 hour chart and you were to fib this up move here, and you say, okay, I like the 618, and I put my stop loss here, and I aim for these targets at the 27 and the 618, that makes a lot of sense, definitely. Ichimoku cloud border always makes sense, in my opinion. I don't actively use Ichimoku. I do know about it. I do have some strategies, but I really don't use them, in fact, actively. But I'm sure that makes sense. Dan Kalen says the 4 hour previous high. So let's go to the 4 hour chart. The previous high here is in fact still up here indeed, 99.12. But we do see that there is a potential fractal here, right, at 98.69. In my opinion, if you take a breakout on the 15-minute world, I wouldn't look at the 4 hour, but I would look at the 1 hour resistance, one time frame higher, in my opinion. If you would take an entry on the 1 hour, if you would be waiting for a fractal break of the 1 hour chart, let's say that here were to be a fractal, and price pushes through the fractal, we have an actual entry right above the fractal, and we can go 1 hour, one time frame higher, which would be the 4 hour chart, and aim for example, the next resistance, and make sure that the reward to risk is in sync, right? By aiming for the next resistance, you always have a safer trade, because if you aim above the resistance, you're hoping for the price to break through that, which is always more difficult for price to do. It's always more difficult to break through that support or resistance. If you aim at that resistance or support, then your odds of a trade materializing are higher. So the 4 hour makes a lot of sense if you were using the 1 hour, maybe even the 30-minute fractal break. But if you use the 15, I think aiming for the 4 hour is kind of aiming for two resistances away, which makes the odds of that trade succeeding lower. So if you then look at the 50-minute chart, 50-minute chart would be the entry above the 50-minute fractal here, and the target would be the 1 hour resistance, which is this level. So that was the answer I was thinking of. 98. If we aim for 98.68, it's about 23 pips, and it's relatively safe trade, 20 pips probably, and it's about 12 stop loss maybe, 13. If we use this low. Anyhow, it doesn't look like we're bouncing. It looks like we're pushing further down, but that was the idea. Entry basically here, stop loss here, and targeting here. That was the idea. But now you know why. I just did it, instead of me giving the answer, I thought I'll ask you first. Because sometimes it makes a bit of better it makes it easier to get the point, maybe. Anyhow. The whole idea doesn't seem to be panning out, so. You sure did, Kayla. You want indicators. Send me an email. Yeah, we'll do that. In fact, anyone who has the right answer, we can provide an indicator. I like that. Well, I'll run out of indicators probably, so that's maybe the problem. Anyhow, and we can see that, yeah, we are making lower lows, lower highs. But is that something that we would be interested in trading? Right? Remember, we can trade anything and anywhere at any time, but do we want to really? Most of the time, in many cases, not. Well, if we want to trade that, if it breaks the down channel to the upside, yes, I'm interested. If it breaks it to the downside, me not personally not interested, because it stopped at the 382, it stopped at the 50, it could definitely stop at the 618, which is the fee ratio, 98.32. There's really not much space here to the downside. And it could already bounce here. Does it have to bounce? No, but in my opinion, the likelihood is that high that it doesn't make sense to trade it. If, yeah, okay. So, let's see on the Dahlia. Let's move to something else. The Aussie was on my list as well. But that broke out. I was looking actually as a continuation here to the upside, but it broke out before our session, in fact. Why is that so? Well, just quickly, we stopped at the 382 fib here of this entire down move. We made a pause. And are now continuing to that upside, right? And we actually broke above this top, which means we know, very importantly, that that resistance is out of the way. So usually that's a good sign of continuation, right? Because at least that resistance is out of the way. It depends on some situations. We know that the pound, even though it breaks the top or bottom, still often has a lot of volatility both ways. So it's not an ironclad guarantee, but in the Aussie, which is a more stable currency, a break of a top like that after a triangle consolidation pause here has a high likelihood of something like this to the next target, which is, what is the next target, which is the next resistance? In my opinion, that is the 50 fib. It's not a top or bottom, but it's a fib. That's because the next top is all the way here, and the currency probably will not move in one go like that. It will, if it reaches there, it will do something like this, right? It will move in phases and waves, whatever you want to call it, ups and downs. So the 97 is the next resistance level. So we, I think, have enough space to the 97 level. So we can go through our steps. What is the trend? Up. What is the opportunity? Well, we broke resistance. It's up. It's not down. The opportunity is up in this case. It's very clear. Not down. Well, let's see. What is the next step? The filters. Are there any filters that could block this trade? Well, any major trend lines, divergences, tops or bottoms? Not really, is there? Not really. One could argue that there's 4-hour divergence, but you have to realize 4-hour divergence is just in play. If you go back historically, and take a look at when divergence actually plays out and has an effect on a currency, then it's usually not the first candle that breaks out. Usually it is after we've made a significant move, and then eventually we do see that divergence play out. But it's not usually that fast. It's more of a warning signal for a bit later on. So I wouldn't call it it is something we note down, but it wouldn't necessarily hinder a smaller time frame at least. So that's filters. What is the trigger? What is the trigger? Well, at the moment we don't have the trigger. That's what's lacking at the moment. We can zoom into this 1 hour chart. We can see that we had a well, last week was very choppy, wasn't it? Let's see. We had a bounce here up to that trend line, respected it, bounce again, then broke, hook back, continued. We're in that continue. And if we then look, maybe zoom in a bit more on the 1 hourly, we can see we're actually right now in an impulse. We are having higher highs and higher lows with this Aussie. Almost every hour, if not every hour, then at least within the 5 hours, 5 to 6 candles is important, right? If you've been here more often, you know why, the time factor. So when we were here, that's what I had on my list, was actually just a continuation trade to the upside. Right now, let's see. No, not right now. We had, that would have been the trigger was basically just a pause here within that impulse, and the entry could have been upon this 50-minute fractal, for example, or even right at the bottom here, in fact. Because if we break this 15-minute low, these fractals here, we're making higher highs, higher lows on this 50-minute chart. So that low, this low shouldn't break in that case. So even an entry right here would have made sense, would have been a very tight stop loss. But now only makes sense if we were to retest this bottom. If we were to retest that bottom, then there is a chance we get a bounce there. So that would make sense. So in this case, the trigger would be a retracement, a pullback, and the entry would be, basically this is also a bit of a supply-demand zone. For those of you who were active or were joining us on Thursday, we talked about a bit of supply-demand zone. You could see that maybe as a supply-demand zone, a small one, 50-minute zone. Maybe. So a hook back there. And bounce. That could be still something that remains here. Let's see. I also want to take a look at the pound odd. This is really falling like a brick, isn't it? Let's see, what is this? This was still a trade idea I had. Pound odd 170. Let's see. I don't know exactly. The problem is, does anyone remember? I don't remember exactly where it is. Where 170. I don't think that got triggered, to be honest. Let's take a look. Because it never got up that high. Not sure exactly where this idea was. I think so after this break. Looking for maybe a move all the way back here, but that we never got that high. It only got to the 50 fib, as you can see. And we're bounced off the 272 target, and we have space potentially to the next target here at 167, sorry. So that's why I wanted to take a look at that pound odd. Let's see. Let me zoom in. I'm putting a line where the 4-hour high is. That should be a resistance because you can see this 4-hour candle is making lower lows and lower highs. The candles themselves, just the candles, right? So if we were to test the 4-hour high, it's a likely bouncing spot, or we shouldn't break that. So we can easily put our stop loss above 167.85. Because if it breaks that level, then we don't want to be in that trade, right? We have moved pretty far from this wave, right? This band right in here. And when we do move away from that band, then there's always a potential to snap back to it. The question is when. Sometimes we do continue, as you can see. Snap back, continue, snap back, continue. So that's always the challenge there. You can see here we continued away from the band for very long. We continued for like 350 pips. At the moment, how much did we move now? 220. So there could be still some downside, right? So where is that 50-minute fractal? The 50-minute fractal is very close to the 4-hour high, right in here. So what we can look for is at least to move back to the 15-minute band, like here, and then we can see that continuation to the downside. So something like that makes sense, right? Because right in here we're far from the stop loss. We could even zoom lower, potentially 5-minute, but we're at the 5-minute band here. You can see there's some divergence. We could easily retrace to this higher level, right? In my opinion, at least. You never know. Looks like it's getting impulsive. I don't know. Personally, I wouldn't be that interested in it. In this case, I'd rather wait for a bit of retrace. I guess maybe if we're trading a 1-minute chart, we did get a rejection here off the long-term moving averages. I don't know. That's the only thing you probably could have thought of. But this is really more scalping than intraday trading. I think a 50-minute time frame is still fine for intraday trading, and then we're preferably looking for a retest of this top, which shouldn't break. So if it gets close to anywhere around 167.70, it's about a 15 pip stop loss, and we can target 167.10, and it's about 60 reward. That would be a sweet trade. let's see. I had some two questions, if you don't mind. We'll take a look at that. Let's see. Let me ask two questions. In fact, Kaylin and Sweet Tan. Let me start. Kaylin already asked it a while ago. In fact, I just wanted to finish this list first. But Kaylin is asking. Tarek also asked a question. 3 questions, if you don't mind. Let's see. Where's Kaylin's question? Oh yeah, Kaylin is asking. Usually you enter at a break of the fractal. Why would you wait for a pullback? Let's see. I think it was, which currency was it? I think the Aussie maybe? No. Euro pound. The breakouts, the exact entry upon a breakout is usually the best if you're trading it with the trend. I don't like to take breakouts, in fact, against the trend, unless I have really strong reasons to do that. So if I'm less sure of an immediate breakout has sense, then preferably there's nothing wrong with waiting. I mean, we know all the PBC concept, right? Breakout, pullback, or if you don't, this is good information. Breakout is the B, pullback is the P, and the continuation is the C. The entry methodologies, you can choose any of these, right? And the breakout could be a break of the fractal, could be a break of the trend line, it could be a break of your moving average. It could be, the B could represent anything. The P could represent a move back to support and resistance, a bounce off fibs, etc. So sorry about that. I just took a sip of water there. So that's the B. The P could be, as I said, support resistances, fibs, anything. And the C could be a continuation, right? The continuation could be, or confirmation, could be a price action, candlestick confirmation, fractal break as well. So in this case, yes, it's true. I sometimes take the immediate break, but the thing is that if I do that, I think the immediate break is always a bit riskier, because why not wait for some retrace at some level? So in this case, it's counter trend, so I would be more cautious with that. That's why. Let's see. The next question was from. Is there a special webinar for dollar yen from Tarek? No, we don't usually have that, but we could, I guess. I don't know if that's maybe as an educational webinar. I'm not sure. We've never had an educational webinar focused on one currency, but maybe we can do one on the euro dollar and the pound yen one day. I don't know. Could make sense. We can think about it. Then the last question is from Sui. What is my trading style? Is it a swing or scalp? I am not much of a scalper. I'm more of a swing trader or intraday trader. So I'm kind of, yeah, let's say my sweet spot is anywhere from a few hours. If you look at the average trade that I take, it's anywhere from a few hours up to 2 days. So yeah, that's what I typically do. But I know that everyone has their own preferences, so I sometimes try to venture out a bit and think differently and try to see how other traders would look at that. But I do think personally that no matter what type of trader you are, I think that most cases looking at those 5 steps that I did is a good checklist in any case. Unless you have, of course, some specific strategy that, but usually even if you have a specific strategy, most of these steps you do look at, in fact, I think, but there are definitely exceptions, of course. Yeah, we can take a look at the CAD. Let me just, no problem. We can definitely do that, Caitlin. If you have any suggestions yourself, please go ahead. I'm just going to take a last look what's happening with the others. Euro dollar is still moving down. Pound dollar, really in the middle of those triangles, right? I don't know. I rather wait for breakouts of those triangles, but Euro pound is still bouncing to the upside. Aussie is having a bit of a difficulty pushing away from that zone. Dollar yen broke. Did it break the low? I'm not sure. Pushed a bit lower here. Let's see. And this could maybe make that push up. Let's take a look at pound odd. We're waiting for that retrace, just like the odd to the downside. That was it. Those were the 6 currencies we looked at. So I got some requests regarding dollar CAD and gold USD. We'll do those both, and then I guess we'll wrap it up for today because we're probably running out of time after that. And I got a question, do I always trade on all currency pairs? Yes, well, I have a wide range of currency pairs. Yeah, I could trade roughly, you could see trades roughly on 20, probably, 20 currency pairs. I don't do anything like peso against the Polish zloty, for example, no. But what I basically look at is all the majors and all their crosses. So I could look at New Zealand CAD because it has 2 majors in, or not. I mean, not that New Zealand and CAD are majors, but they're at least major minors. Let me say it this way. Or the Euro Yen is logical, but how many trades do I execute a day? Well, typically 1 or 2 for intraday trading. So for me, intraday trading is something that it's like, yeah, I'm not trading, I'm not a scalper, so I'm not taking 5, 10, 15 trades a day, no. But yeah, I don't know, it's maybe, I've been thinking about maybe even, trying that out, but to me, this is for me, the disciplined way of trading that I've learned. When back in the day when I was learning trading, everyone has to learn it. I learned it as well, right? And scalping and taking that many trades in a day, I'm not saying it's not possible, and I know everyone will love that, but you have to realize it's just you need a lot more experience. And if you're starting out, then you're exposed to a lot of risk to the downside because you won't know when to take the trade, when to take the profit, and you'll be exposing yourself to a lot of losses. First, learn to trade with a disciplined approach. If you can make money with that, then you can always move maybe on to scalping if you like to. Yeah, pound dollar is definitely an indecision at the moment. Okay, I'm just keeping an eye on this dollar yen. Just want to see if maybe it's worth maybe even a buy right in here. We do have divergence on the 5-minute chart. Yes, we're in this smaller downtrend channel. Then again, we could be making, for example, an inverse head and shoulders here. That would be a typical scalp, wouldn't it? Is the price frozen? It doesn't seem to be moving though somehow. It is. It's just awfully quiet. Well, we do have news, but on the pound and euro, as we know. But maybe the market is quieting down a bit. We are getting within a half an hour now of that news event. I don't know. It seems awfully quiet. Weird. Almost seems like frozen. I mean, it's moving a few tenths of a tick, right? Funny. There it is. Finally. I was just curious, when is it finally gonna move up or down? But now it moved down. Okay. Well, we had our fun, if you call it fun. But I'll take a look at the XAU and use and dollar CAD. I trade in a pro account. And why do I trade in a pro account? Or maybe I don't know exactly what the question why was intended for, in fact. Oh, okay. Well, I don't know. It seems logical. That's, I guess, something that Michal could answer better than myself. Looked like tight. In any case, there's very tight spreads. I just really went automatically for that at a pro account, in fact. That would be, I can't imagine. That would be odd. Maybe that's just a coincidence if that happened. Well, you can keep an eye on it. Let me know. I can always, I can always switch. No, yeah, I can't imagine though. That's probably a coincidence. So, but I mean, by all means, keep an eye on it. I mean, I would love to hear that. So this is the XAUUSD, right? And the way I look at the XAUUSD is this. We had, I should change that trend line a bit, maybe like that. Alrighty, something like, oh, 1 second, it's, something like this. So we are in this downtrend in any case. We made a up move, retracement to the upside, which was nicely done in the channel. We found some resistance in here, and it was enough to push it down to break that channel and move down, down, down. So we're in a downside. we're in a downtrend, back in a downtrend in fact, and we're making lower lows or highs on the daily chart. So, that's just a fact. There's no, it's not an opinion, it's just a statement. It's a fact. It's in a downtrend. We're making low lows or highs on a weekly and daily basis. One thing we do need to be aware of is that if you fib the upside though, obviously there is a chance that those fibs could be support, which it did, bounce off the 50 fib, bounce off the 618. The next bouncing spot, because we're underneath that support level, is the 786 fib at 1233. So if you take any shorts, 1234, then your target should be 1234, because that's where we could likely see a bounce. If 1234 is the target, then you know your reward. So if you take any shorts, you just have to make sure that the risk is aligned with that. And if you look at the 4-hour chart and you put your stop loss above the 4-hour top, then we know that that isn't aligned with each other. So it would have to be a smaller time frame. This is the daily chart, sorry. If we were to break the top of this channel, then we have some upside to the orange trend line. And if we break that, we have upside to the red line, which is 1525, which is the big weekly bottom or daily bottom as well. Oh, no, more of a weekly bottom right in here. Once price gets back to that, there's a high likelihood of at least a bounce for that level. So down to the 4-hour chart. We know where we want to be potential bulls and buy, and up to which level. We know what the target is for downside, and we're in a downtrend. So we know the trend, we know the opportunities. Someone asked me what those 5 steps were. I thought, if I missed the question, never hesitate to ask again. Sometimes I forget it. Trend, we know what the opportunities are. Are there any filters? Well, not really anything blocking from the trade from materializing, so no. What are the triggers? We know partly what the triggers are with the trend lines here. With the downside trigger is not that known yet. And that is with the trend. So that's the opportunity we should focus on until we break these lines. So that's step 4, the trigger. Step 5 is the entry methodology. So once again, trends. 2 is opportunity, sorry. 3 is filters. 4 is trigger. 5 is the actual entry methodology, right? And it all depends what tools and indicators you use. Everyone can fill this list in differently, right? You're just seeing me use moving averages, fibs, trend lines primarily to make that equation. Fractals and the oscillator. So anyhow, back to 4-hour chart. If we break below this low, below the support, 1261, and we put our stop above the high, which is 1290, it's about $30, and that's less than a 1-to-1. This potential target zone is still less than this potential resistance zone, just by measuring from one support to another. So if it's less than 1-to-1, then the time frame is still probably too high to take that trade. Right? So the 4-hour chart would still not be that good for trading this downside if we break here. Would we want to take it right in here? Well, let's zoom in. Do we want to take a short right in front of a support like that? Not really, right? Because that could be used for a bounce. So it doesn't make sense. If we break this support, do we want to take it? Well, I already answered that. That depends on the reward to risk, and it isn't a 1-to-1, so it doesn't make sense in the 4-hour chart. So let's take a look at the 1-hour chart. And we can even connect these stops here. That could already be an indication, in fact, if we break to the upside to the top of the channel. That's counter trend though, definitely. Right? That's a counter trend trade still. What else do we have? We don't have any chart pattern, in fact. It's just one ongoing move. Probably the only opportunity that I find interesting is if we move higher. up to back to that green line, I find resistance in here for downside. That would probably be the only thing at the moment that makes sense to me, to wait for a move from 12.755 with a stop loss above 12.90, targeting 12.30, which is about 45 to 15, and then you do have all of a sudden the reward to risk, because then you're talking about a 3.5 to about 2.5 to 3 to 1, and the risk here is that, and the reward is all the way to 12.30, which is not even on our chart, right? So I don't know exactly where it is, somewhere here. That would make sense. So that would be the only trigger or opportunity, in fact, if we move up here and get a confirmation, maybe then to short it down. At the moment, we're too close to support. If we break that support on 1 hour chart, you could, I guess, use this as a stop loss, but it's kind of halfway that 4 hour world as well. So the stop loss is maybe tighter, but the disadvantage is that the stop loss is less safe. If you look at the 4 hour chart, where would that stop loss be if we put it above the 1 hour fractal? Well, it would be right in here, which exposes us to a downside and then a retracement of this swing high, swing low to retest this top, and our stop loss is in the middle of nowhere, in fact, with that said. So I'd rather wait for a pullback and turn for downside on looking at this one, even this 1 hour chart. That's the only trade I think makes sense to me. Let's take a look at the dollar CAD. And if I do take a trade, by the way, sweet on, I definitely will mention the levels, no problem at all. But at the moment, it doesn't look like one is emerging soon. But if we were to take one still in the next few minutes, definitely, or any other session, in fact. Kaylin had a good question. What are the entry methodologies? That's really, I mean, that could be really a lot of things. It could be a retracement of a candle. It could be a breakout above or below a fractal. It could be a break above or below a trend line. It could even be a bounce off a trend line. It could be waiting for a bounce, and the trigger could be the bounce off the trend line, but the actual entry could be the break of the fractal when you know that the currency has actually bounced. For example, here, the trigger could be this bounce, but you would only enter using this fractal and move below that fractal. Or others could use this touch of the fractal as their entry. While some use it as their trigger, others could use it as their entry. You could also use the break. So that depends on your trade. If I trade and or breaks of fractals and trend lines. Let's see. So this is the dollar CAD. Let's start with the daily. A lot of red lines here. Not sure. I forgot why, so I'll just take them off. What do we have here? We could have a potential uptrend channel, in fact. Something like that. Where's the daily support in here? Where we broke this daily support, we still have one down around 102.88. If we put a fib on this entire downside, You can see why we do that, why it's important to do that, because those fibs are potential resistances, and it stopped at the 618. So it respected that resistance and is now retesting this support. Why this support? Because the 4-hour support has already broken. It's making lower lows and lower highs on the 4-hour chart. So that 4-hour chart, that 4-hour downtrend will last probably until it tests some support, which is, if anything, around here, right, at 103. So we could look for maybe some downside. 1-hour chart. Unless you're in a very strong uptrend, then you would of course want to put a fib on this up move, because those could be potential supports. And even if it's not in a trend that strongly, in the case of the CAD, you can see it did stop at the, let me make it a bit more readable for you, 1 second. Even if we're not a very strong uptrend here on the CAD, we did stop at the 382 and the 618 fib. So 786 could be a potential bouncing spot. Let's see. So how much? We don't have much space to that, a bit. 786 is around 103.17. The stop loss would have to be above the 1-hour high. It's 103.60. Right. So even if you take it right in here, there's about a 1-to-1. Well, that's not fantastic. How about the 15? I would say there's a strong likelihood of, let me write this down because it's pretty interesting in fact. I would say there's maybe a potential to move down to the 786 here. It would be especially sweet if it would move up just a bit more maybe, or to about 103.50. If we get some pause there on the 5, maybe for a fall back to 103.20 for 30 pips could make sense. Something like that. It's possible. Kalen says, though, that there's hidden bullish divergence. So that's something we definitely want to look at, because if we're shorting, then that could be a filter. If there's hidden bullish divergence on the 4-hour chart, then that's something we definitely want to be aware of, because it could be a filter for taking any shorts. Why is that so? Because it's a bullish signal. If it's a very strong bullish signal, then we want to, if we're looking for, if the opportunity is a short, that could be a filter, right? What is the trend? It's up. Well, it depends what time frame. It's kind of a mix. Daily up, 4-hour down. So you could have opportunities to both sides. In fact, the filter, there could be filter, bullish, hidden bullish divergence, which means that downside would be filtered out, in fact. Right? So it leaves maybe potential upside, for example. And it's true, this oscillator is a bit lower than that oscillator right in here. And that could be the bullish divergence. So if you're a swing trader, you're not looking at swing trades, but if you are, it could make sense to maybe even put a buy order right at the 786 fib with a stop loss below the low here. And target this minus 272. Right? That's definitely would make sense considering that aspect. Or if we don't get that low, then the potential to put an entry order above the 4-hour fractal, which we don't have confirmed yet, that will be here, with a stop loss below the current low with a take profit at minus 618 could also make sense. So one is a fib trade and one is a breakout trade, both based on the 4-hour uptrend and bullish hidden divergence to the upside. Kalen is asking why the 786. That's because if you look at the 1-hour chart, we're pushing through the 618 fib. And we bounced off the 618 fib, but we didn't use it as the fib to move up. Actually, we broke below that fib, which means that in my experience, there's a decent chance of reaching this 786 fib. So that's why I think there's a likelihood of, even though we have bullish divergence, of using this 1-hour fractal as a resistance for that downside to 786, where we could see the bullish divergence kick in and see that upside to the minus 272. So you can take an intraday scalping trade to the downside and then a swing trade from 786 to the upside. There is a potential. Kayla is asking if you can wait for 323. Yeah, 323 is fine. I mean, it's only going like 7 pips, 5 pips above a fib is nothing wrong with that because you have spread to account. Sometimes the currency bounces off a fib by 3 pips. So having a bit of an error of margin there makes sense. So if you go in at 103.23, and the stop loss would need to be below 102.90, which is like 102.85. It would be a 38 pip stop loss. But the target would be 104.52. So if you go for 104.40, it's a 117 target, which is about a 3-to-1. Yeah, makes sense to me. I think I'll punch in that order myself. I will not put an entry order on this short though. And the reason why is just because it's a scalping trade. I want to see a confirmation on lower time frame of the turn for downside. It's too risky to put an entry order there. I would only put entry orders on swing trades. And if I'm trading intraday, unless I'm trading my specific breakout strategy, then I do put an entry order. I'm taking, I would take only market orders. Unless you're trading a specific strategy where you have a really, something that you're for sure taking at that level, or swing trades. So the upside entry order makes more sense to me than the entry order to the downside. But it doesn't necessarily mean you must have an entry order to catch along here. You could still just wait and see, wait for 1 hourly candle to get a pin bar around this area, and if you see that pin bar, then take the order. That's fine too. That's a different entry methodology. A different trigger and a different entry methodology. Well, maybe this, yeah. Maybe the same trigger, but a different entry methodology. All right, folks, that will wrap it up for today. Thank you so much for being here. I hope I answered all the questions. I think I did. Well, I hope to see you tomorrow. And Thursday, we'll be talking about with the trend and reversals on Thursday. Yeah. So, well, I wish you all great trading, first of all. And thanks again, and see y'all soon. Cheers, everyone.
For your